Really excited to get into this information. If you're tuning in, welcome. Welcome, Larry. Welcome, Sean. What's up? What's up, Ray? What's going on, Callum? What's going on? My boy Jonah. Boy Johnny on here. Damar. What's good, Damar? Love the name 888. Infinity, baby. No doubt about it. No doubt about it. We're absolutely limitless. No doubt. What's going on? Oh, I see Johnny back there. He always be on other people's Zooms. Johnny just hiding down there. That's dope. Oh, Mr. Scalp King. None other than the man himself. Funny story about Johnny. If you guys don't know this story, correct me if I'm wrong, but this guy on one trade, his account was it was like, I don't remember if it was either like 700 or 800 or whatever it was. And a boy literally made like 10 bands on one trade from a $700 account, like an $800 account, literally. So Scalp King Johnny, he's on Viviana's screen right now. If you guys don't know. What's good, Brett? Good to see you. Good to see you out here. My man, Brett. Yes. Yo, Renee's on here. Take profit. Hey, we about to smack a take profit. I'll show you a take profit. But yeah, it's going to be a pretty chill night, like I said. We're going to get into a couple things, a couple charts, a couple setups. We have alerts set, so we're not going to miss anything. The only trade I'm in is USD CAD. I had re-entered that. I sent it in the chat the other day, but it hit break even. Now we back in it. We back in this. I honestly think that is really gone now, to be honest. Banks got in it today on FOMC. If you guys aren't aware of what FOMC is, I honestly was slept in today, and I didn't even know today was FOMC. So I'm kind of salty because gold gave us such an obvious buy today. But whoever caught that, shout out to you. You're lit, because I was ready to. Just kidding. We use risk management over here. I was about to say, we don't over leverage. Don't say that word. We don't do that. We risk management. But that one, I mean, I don't know. No, I'm just kidding. But if you guys read, Mark Douglas, or you listen to Mark Douglas, Trading in the Zone, the whole concept is you don't know which trade's gonna win. I know, like, with smart money, there might be a couple times I don't know, like it might be pretty guaranteed, but at the end of the day, guys, we got to use risk management because it's a long-term game. It's not let's see who can get the best flip this week. F it. We got some residuals coming in next week. Let's just see who can do the most flip. Like, nah, let's be smart. We're investors here. We're not gamblers, okay? We're investors. We're not gamblers. It all happens to some of us. It happens to the best of us, right, from time to time. But just going to give you a couple of things before we get into the charts, before we get into the setups. We have a couple other people going to be hopping on here as well. Welcome those of you that are just hopping on. Welcome those of you that are just hopping on. What's going on? What's going on, Delvis? What's good, my bro? How you doing? Looking fresh? What's good? Yeah, man, we're going to get into some things. So for those of you that don't know me, real quick, I've been trading for 2 years now here in Eye.Am Mastery Academy. A little bit over 2 years, about 2 years and 3 months now. 2 years, 2 or 3 months now. So I had a little bit of experience. I've seen back when Wealth Club with Gustavo was there. I mean, it was Major League Trade back in the OG days of Millennial Mindset. For those of you that are in here, Millennial Mindset, I was in there when Millennial Mindset was an 18-person Facebook Messenger group. There wasn't even a Telegram. It was literally just an 18-person Facebook Messenger group. Now there's like 2,000 people in there or something. I don't even know. It's crazy. Shout out to you guys. Shout out to you guys in Millennial Mindset, the OGs. Let's get it. Yeah, back when I got started, it was Abel and Ray and Gustavo. Abel, Ray, and Gustavo I think they're really the only 3 people. Out of that 18, they're the only 3 that are still here, I believe. There may be one more. All of them multiple 6-figure earners now. So it kind of goes to show that pretty much everyone that I've seen hit that 2-year mark is either hit 6 figures or they're right there. They're about to hit it. Like everyone, realize that this is a process. This isn't a get rich quick. This is you're going to get rich eventually. And we've seen this time and time again that traders that stay in the game and you know, discipline themselves to learn what it takes, you know, and realize that it's, you know, probably 10% the charts. I mean, you guys find a strategy that works for you within the first couple months, you know what I mean? And then it takes you a certain period of time to hit your first 5 figures, and then your first 6, and then your first 7, and so on. And you realize that it's more about mastering yourself than it is anything. It's more about learning discipline and consistency and focusing on long-term investor mindset. And a lot of us here are young, so our concept of time hasn't quite got there yet. But I mean, if you were to talk to, let's say, someone like this, you know, maybe 40, 50, 60 years old, their whole concept of time is much different. They're not trying to catch something in the first couple weeks or couple months. They're really looking at, okay, what can I do over this decade? Like, that's the way they look at things. So really just realize that you're in something that is going to be an income for you for the rest of your life if you can go through the process in the beginning. It's something that no one can ever take away from you. Like, you guys seen jobs going around, people are losing their jobs, whole companies are getting shut down. Like, the US is in a recession right now. A lot of jobs, some of them are opening back up, some of them are out of business now because they couldn't afford it, what just happened. So, like, realize that Forex is a skill set that no one can ever take away from you. So a couple things before we get into the chart. Number one, personal development is going to be one of your keys. And, you know, I know we talk about personal development when it comes to building the business, but even with trading, you need to grow yourself. You're not, like, the version of you right now mentally is not going to be the person that's ready for $1 million, because if you were ready, you would already have it. So simple as that. You got to know that you're going to have to grow. You're going to have to grow, and, you know, personal development on a day-to-day basis. It's not only just what you listen to with your headphones on, but also the people you surround yourself with. One thing that I heard from David Emanite today, he said, whatever you're believing for, so whatever goal you have, whatever you have written down on your goal card, right? Whatever you have written down, you can't have people in your life that are believing against it. So it's that simple. Hey, if you want to be a 6-figure trader, if someone in your life doesn't believe you can do that, you need to cut them out of your life immediately. It's just like that. It's like that. Some people aren't ready to grow themselves, and they'll put down your vision and say it's silly, it's unrealistic, it's risky. Those are all people that don't have the results you want. So stop listening to them and cut them out of your life immediately. Like, think about it like this, guys. You are going straight. You're going one direction. Let me actually write this on the screen. If you know where you're going, it's pretty clear that if someone gets in your way, you need to either go right through them or move them out of the way. It's that simple. If you are here, let's draw this on the screen. It's in white for some reason. If you are right here, where you're going is right here, you got to go like this. And now if someone comes into your life, or someone's already in your life, they're dragging you down, you got to cut them out. Because what's the fastest way from point A to point B? It's a straight line. So any distractions is going to take you off course. Being around the wrong people is going to take you off course. Getting upset and taking, you know, time away from personal development is going to take you way off course. You got to keep growing every single day. You got to keep growing every single day. It's really important. Now, kind of get into some of the principles in trading in the zone. First of all, books. Trading in the Zone. I actually have the book. It's on YouTube for free. But if you want to read the book, that's cool as well. Trading in the Zone. Trading in the Zone. Now, kind of some concepts from that is that you need to have a trading plan as far as what you're going to do. You need to have predetermined rules for entry, mid-trade, and exit. You also need to have predetermined rules for risk management, and you need to have predetermined rules for, you know, how you're going to manage the trade. Okay. Now, that's an important part. That's probably maybe 20% of the most important part, but the more important part of the trading plan is actually executing it. That's really the main thing. And I'm telling you guys right now, I've been writing down trading plans for so long, and I can tell you right now, once one thing to have a trading plan is another thing to actually execute it. And some of you guys probably know that we're not perfect. We're human beings. you know, and we're all learning here. A lot of these, you know, everyone in here, if you guys can drop in the chat how long you've been trading, go ahead and drop in the chat how long you've been trading. You can drop it, whether it's weeks or whether it's months or whether it's years. Drop in the chat, and I'll drop mine first. Mine is 2 years and 2 months. 9 months, 9 months, 1 month. Okay, so for those of you that don't know, 9 months in was when I actually had my first withdrawal. 9 months in was when I had my first withdrawal. So if you're not in your first 9 months, or if you haven't even hit 9 months yet, you know, don't expect yourself to be a millionaire right now. Like, you're gonna get there. You will get there if you stay focused. That's really the main thing. Okay. So what's helped me and what's helped a lot of other traders is having a trading journal. So the thing is, how do you know if what you're doing is working or not if you don't track your trades? Because what I learned was whatever you track grows. So if you want your trading account to grow consistently, you need to track it. Now there may be people that, you know, you don't even need to do that. There's a few people I know people that are very successful, and you know, maybe they're really good at trading. Maybe they make a lot of withdrawals. Maybe they flip accounts, but at the end of the day, like, I play the flipping the account game. It works from time to time, and then sometimes it doesn't work. So why don't you journal what you're doing and minimize those mistakes that you're making? Because for you to make a mistake over and over and over, it's really silly. It makes no sense. So it's like, whenever you win, say what you did, and say what you did when you lose, and say, did this follow my trading plan, or whatever, and so on. And a lot of times you gotta have your journal before you can even create your trading plan. You know, journal your trades. Okay, now what did I do that worked? What did I do that not worked? And kind of just get that concept. For me, I literally copied Lasaldo exactly for my first 6 months. I copied him exactly. All I traded was teacups. I was on Go Live every single morning at 6 a.m. Had my coffee. I was tired as hell. I did not want to be awake, but I did it. Like, because why? Because I wanted to be free from my job and from doing what someone else wanted me to do, way more than I cared about having, you know, a good amount of sleep every night. Like, I cared about my freedom more than I cared about the process of it being hard. Like, oh wow, it's gonna be hard, I might as well not even try. Like, people really, you gotta have personal development. You gotta be thinking the right thoughts. And with trading, like, you need to not only have the trading journal and trading plan, but you need to trade in a positive state of mind only. Or you need to be in alignment. You need to be in alignment. You need to be feeling good. This is one of the most important things. It's really, I mean, I think that's the most important thing at all times in anything anyway. When you're feeling good, you can look at the market in a clear mind, and not, like, the thing is, you cannot make decisions when you are worried or when you have stress. When you have the hormones of stress, you can't make decisions. It's just a whole mess. So if you're mad, if you're upset, if you're sad, or if something just happened to you in your life, you have no business looking at the chart. I don't care if it's a signal or if it's your own analysis. You have no business opening up your MT4 ever, unless you are in a positive state of mind. Okay, that's just not going to work, and a lot of you probably already know that. It's not the signal. It's your state of mind that created a situation where you actually saw the signal that was going to lose. That's literally how this thing works. Okay, so if you take signals that lose, well, you're just looking at the chart at the wrong time because you're in the wrong state of mind. Okay, and I know this for a fact, because even back then, when I still trade Gold Cup from time to time in the morning, and I still take Steady when they call those out. And, you know, just recently I've been getting on some of Nessa's HFX. But for the most part, I mean, I've been trading off of a mixture of Zach and Jordan and Luke Longmire for the last, I don't know, year to year and a half. And the 6 months before that was pretty much just Luke Longmire. And it worked just fine. Like, every trading strategy works. You don't have to know everything about the market to make money. You don't have to know what direction it's going to make money. You don't have to know the next move to make money. What you need to do is you need to follow a plan consistently and use your risk management. Like, that's it. Like, it's really simple, especially those of you that are trading, you know, with a good risk to reward. You don't really have to worry about being perfect. And if you protect your entries, then You know, you're minimizing your risk. Like rule number one in trading, there's 2 rules in trading, and I got this from Mark Douglas, I believe. Rule 1 is preserve capital. You need to preserve the capital you already have. That's rule number 1. That means you got to protect your entries. That means you got to use risk management. That's number 1. If you lose money, you're not going to make any money. And then what's going to happen is you're going to try to make it back, and it's going to make you lose more money. Okay, it's this whole cycle. You know, a lot of us have done that. You probably have done that before at some point. Rule 2, yep, I've done it. I've done it a lot. It's happened to me a lot. Increase capital is rule 2. So if you can't keep the money you already have, you're never going to be able to increase money. Now, if you're focusing on increasing capital more than you're focusing on preserving capital, that's when you're going to lose. Okay? You're going to lose if you want to make money more than you want to keep the money you already have. So Luke Longmire, what he taught me was, I'm greedy the opposite way. I don't want to give up. I don't want to risk any of the money I have. So he was dropping, he literally said this, his first 2 years, I believe it was, of trading, his first 2 years, he was dropping 0.01s on every trade. Now, keep in mind, he had plenty of money, like from his other businesses before he joined trading, to be dropping standards. And he was doing 0.01s because his risk management was amazing. And that's why now you see him dropping 25, 30 lots every trade or whatever he does. I don't even know. Because he had mastered risk management to where he was confident enough in his own strategy and execution. But when you're using too high of a lot size, you're really putting yourself at risk, and you're allowing your emotions to get involved. And when your emotions are involved, then you can't look at the market in a clear mindset. You have to, if you're emotionally involved to a trade, you need to use a smaller lot size. And oh my God, USD CAD is gone. Is gone. But you feel me? Is really gone. But so hopefully that makes sense. And it's really important to, like, and a lot of people on here, I mean, there's a few people hopped off, a few people on here. I mean, they probably just wanted to signal. It's all good. We got the alerts coming. But like, guys, like, it don't matter whose trades you take. It don't matter how much you know about Forex. If you can't get these 2 rules, it's not going to matter. Not going to matter. You could be the best trader in the world. Look at that. The alert just came in. So US 30, I'm just kind of looking to play off this 2 hour here for a continuation buy. And pretty much, like, I'm really looking for it to come up here before it continues down, before the big sell. I want it to come either to this one or to this one. It could be, you know, whatever. I don't really care what's going to happen. Like, that's the thing. A lot of people get too caught up with what's going to happen next. And I literally could care less. This could destroy that, and I wouldn't even care. It would not faze me at all. Because number one, I normally don't even set limits, but unless there's certain times where I do. But this is just an area we're looking to play off of. That's how I kind of see it for me personally. Most of the time I do market executions on buys, and then a lot of times I do limit on a sell. But I mean, US 30 has been gone up to the upside ever since. I mean, back when it was down here, everyone was thinking the market was going to crash. I mean, it was pretty obvious. I'll show you guys here why US 30 flew to the moon. Of course, with fundamentals, they pumped trillions of dollars in there. So, like, keep in mind that, like, this whole move was with fake money. So, like, the dollars are in a recession right now, and the stocks are like high ever since that crash. So, but if you guys, for those of you that trade smart money, you know, check this out. So we have this weekly order block right here that got wicked to literally the T, like to the pip. Okay, that happened. And then what do we have for those of you that trade candles? We have a daily tweezer with a strong rejection right there. And right around that time, on some webinar, I literally said that it was coming up. It was coming up. Honestly, I thought it was going to reject in here, but it didn't. So that one didn't even end up catching an entry, and that one, it just flew right past it. It really just flew right past that. It was a 4 hour, or is it 2 hour or something? I don't know. But you got to think, if the dollar is back here in recession right now, if they're coming to a recession, odds are a lot of times that the US 30 or the stocks is going to follow the dollar. Not always, not exactly, not the timing, but generally speaking, they tend to follow each other in major economic crisis times. Generally speaking, not always. but it's something to be mindful of. But I would be surprised if we didn't see this up here get played off of. But either way, it don't really matter. Um, Never attach yourself to one trade. Another thing to keep in mind. Never marry a trade. I've done it before. I've lost my ass on it multiple times. And I've also flipped accounts from doing that as well. But like, don't marry the trade. And when I say don't marry the trade, I more so mean just protect your entry. Like, if you know you got a perfect entry, like, you use your own risk management plan, but like, protect your entry. You know what I mean? Don't be. Sometimes what I used to do is I'd catch a good entry, and I'd be like, oh, this one's for sure gonna go up there. Oh, this is a perfect trade, has all the confirmations. There's no way this won't win. And then what I used to do was I would like not go break even because I know it's gonna win. So like, don't do that. Just fucking remember, preserve capital is number one, increase capital is number two. So it's like, you would rather not take a loss than you would win. Because a lot of times, no trade is the best trade. So you keep that in mind. I mean, you could take one trade a week, 2 trades a week, 3 trades a week, and you could sit here and pay off all of your monthly expenses in 1 week just from being smart and like putting yourself in a position to win instead of trying to make money right now. What's a good setup for tonight? It's like, that should never cross your mind. Like, you shouldn't be trying to make money. That's not your goal. Your goal is to, when you get a clear sign to enter, you do. And when you don't, you don't. Like, it's that simple. You're not like, okay, well, it's Tuesday night, there's got to be a setup. No, it's Wednesday. What's the best trade for tonight? We got to know which direction the trade's going to go. We got to know all the confirmation. It's like, you're really overthinking this. Trading is up and down. You have an edge over the market. You don't need to be right every time. You need to be right more than you're wrong. Or you need to have really good risk reward to where it doesn't matter how many times you're right or wrong, because the winner always outweighs the losers. Okay, so with that being said, wouldn't it make sense to put yourself in a position to win consistently by taking the best trades and not over leveraging, not being greedy, not looking for a trade? You're not looking for a trade. Like, when a trade comes to you, it's obvious. It's so obvious when there's a good trade that you don't have to. It's so yep, and sideways, and even depending on what time frame you're on. I mean, I trade gold in US 30 almost exclusively. Just recently, there's some good swing setups on some other US pairs, so I've been looking at them. But I mean, gold, like, it does, even when it goes sideways, you're still catching 100 pip moves. So if not 200 or 300. So it's something to keep in mind. Those of you that are trying to look at hella charts, you're looking at all these different charts and trying to find the best pair. I mean, Forex is like, it's hit or miss for me. Like, it's like Forex pairs. I mean, like, a lot of times there's just nothing clean, and it's just choppiness, and you just trying to force things. With gold, it moves so cleanly that, like, when something appears, it's so obvious. And then US 30 as well. And just recently, like I was saying, I'm actually going to get into some charts right now. So the first one I kind of already went over is US 30. It's obviously an uptrend. For those of you that just finished the academy, I don't know if anyone on here just finished the academy or you're in basics right now. You realize that we're in obviously this is an uptrend. Like, this is from, and keep in mind, trend is also relative to the time frame you're on as well. But that's an uptrend. Like, it's on an uptrend. There's a lot of momentum going up. So we're not looking for sells. Like, the only way we'd be looking for a sell is if it hits some key point of interest that indicates that the trend is switching. And since we're talking about the daily and weekly time frame, until I get a reason to think there's going to be a sell, I'm not even looking for sells. There's no point. Why would I? I don't have to catch a trade right now. I don't even have to enter. I could watch a trade win, and I could be right and not enter, and that's fine. Like, I'm not trying to make money this trade. I'm not trying to make money tonight. I'm not trying, you know what I mean? But if it looks clean, it looks nice, it feels right, we're gonna get in, you know? And then I don't care what happens after that. You're not attached to the outcome, because you already know your strategy works, because every strategy works. Your own mind, like, keep this in mind. No one really tells you this, but I'm gonna tell you right now that a lot of you on this call are probably skilled enough as a trader to be making $1 million. But your identity of yourself will not let you do it, because you don't see yourself as a millionaire yet. So, like, your subconscious mind will literally sabotage your own success. You're unconsciously, without you even knowing it. So be aware of, you need to really focus on seeing yourself as that person more than you are taking the trades. Because I know for a fact there's multiple people on this call that you have the skill set to be making $1 million already. And I do as well. So that's something that I'm telling you that because I've realized that in myself. So I've been able to see that and reflect and tell you that I know probably a lot of you are in a similar situation. So now it's just a matter of time. But I will tell you that could be something that could really help you speed up your process and start to see yourself differently. Start to see your, like when you look at the price tag of something, say like, oh yeah, that's just 20 pips. That's easy, no problem, 50 pips. You know what I mean? Versus like, oh wow, it's like if you're someone, a lot of people that join this business, they're like, from my experience and, you know, in my organization specifically, a lot of people they're young, we're either in school, we're either working some job right now, or we're whatever the case may be. So making $1 million is a kind of a big concept to us. We don't think don't look at it as so big, just, you know, go through your own process. Go look at your own process. UJ, just get into, there's 2 pretty clean daily candles on UJ right now that I like. But I'm looking to play this one down here. I believe that for right now, it kind of mirrors the dollar in a sense. And I want to show you the dollar first of all. We kind of see a pretty nice candle down here on the DXY. The DXY is the dollar currency index for those of you that do not know. And we see a pretty clean candle down here that is already rejected. So as you can see up here, I mean, it's Wednesday. For those of you that have studied market maker method or whatever, it's kind of a key term they use, is midweek reversal or whatever, you know, I'm not really too sure, but anyway, it's like, it's Wednesday. It's right here at the daily order block. It's right there at FOMC just hit, you know, a lot of things are happening right now. GU as well, absolutely tanking off this weekly order block. We are on a webinar a while back. We were talking about this. It came up and hit this, and it actually has already dropped 100 pips. So it's already dropped 100 pips off this weekly. No really entries here. It already happened. It's already gone. USD CAD entry's already gone. But with that being said, there is US 30 for me personally. There's US 30 UJ could happen tonight, and then gold. Like, you never know with gold. It could do whatever it wants, really. Oh yeah. So let's show you. Let's go over this. Let's go over this FOMC. This FOMC this morning. This is so nasty. Honestly, this is me personally. This is my favorite setup to trade because it's so accurate, especially during news. Because why? Why is news a really good time? Because that's when the banks are entering. So like a lot of times I've seen this before, and for those of you that don't know this, you want to take note of this. If there's a major news event coming out on a given currency pair, you shouldn't be looking to enter a trade on that pair until the news hits. A lot of times a few minutes after the news is the best entry, or it could be hours or the night after it hits. Okay? Because realize this, guys, the banks are not in the trade. They're not in the market, so it's not going to move that much. There's not going to be much volume. If the banks aren't in there, then why would we try to enter knowing that it may give us 30 pips and then come back, 20 pips and then come back? Like, even if it might move, I know there's some weird pairs like, what is it, like GBP NZD and things like that. Like, I don't even know about that pair. That goes so fast sometimes, I swear. Like, I've seen that one move crazy right before news. Also, guys, know that the banks know it's going to happen before we know it's going to happen. So that's why a lot of times you'll see crazy movement right before the news. So they need to move price real quick before they tell everyone else. They need to move it because they know where it's going. This whole thing is manipulated. So they know exactly what's happening before it happens. And it aligns up with news events. And for those of you that are kind of keeping up to date with the news and knowing that everything on the news is a lie anyway, so it's like, it kind of just all aligns itself. You know, technicals are just a reflection of fundamentals. And a lot of times some major news event lines up with an order block on purpose. Like, they do that on purpose. You know what I mean? So don't be surprised when that stuff happens. It's an extra confirmation. Yep. News is just an excuse when it's really a lie. Okay. So let's just do 15 minutes so we can see. So clearly here, I mean, that was an hour 30 and 15 minute. Okay, and we obviously have some equal lows right there. I like to use Mr. I over here. Shout out to John Fibonacci for the eyeball. I like the eyeball personally for me. And I know someone caught this sell. I think it was Jake Wood. He caught this sell up here. So where was it? Oh, the news was 12 my time, mountain time. The news was 12 mountain time. And let me just turn it. Is this too loud? Is this too loud? Let me turn this down a little bit. Over here, I don't know if you guys see this, but these are my favorite homes that trading is going to buy me. So you should keep that in mind as well. But okay, so blue lines when the news hit. And as you can see, we have, oh, shoot, hold on. What's going on right now? Yeah, so, I mean, you guys know, those of you that were looking at the charts earlier, you already know this happened, but I just want to tell you why this is such a beautiful trade. I mean, we have an hour order block, which is also a 30-minute order block, which is also a 15-minute order block, which might be a 5-minute too. I'm not sure. I don't know if it came down to the 5-minute or not, but either way. So keep that in mind right now and realize that. Also keep in mind that we're in an uptrend. This whole thing's an uptrend. So we're already looking for buys anyway. We're looking for buys either way. Like we're not even looking for a sell. We're looking for a buy anyway, or there's no trade. It's either a buy or no trade. That's how I was approaching this because the sell's up here. One thing Luke Longmire taught me was, hey, trade at the beach, not the ocean. What do they tell you in the academy? The trend is your friend, okay? So why would you even like? Oh, a lot of times we get so attached to making a trade right now because we're so thirsty to make money. But like I was saying, so check this out. And a couple months ago, this exact same move happened on NFP, where there was an obvious order block with equal lows, knees swept, and then news is what did it. So it's actually a 1-minute entry. For those of you guys that have seen my other videos, I enter on candle confirmation most of the time. So it gave us a really clean candle here, as you will see, that goes right into it. So what do we have here, guys? We have a nice hammer candle that is about, let's see how long the wick is, guys. Let's see how long this wick is. Wicks are a sign of rejection. That's a 40 pip wick on the 1 minute. Now watch what happens. It literally never comes back. It's gone, like gone. I mean, I probably would have already been out right there, 100 pips. I mean, I'm taking 100 pips, I'm out. Like, I'll hold a partial and hold the rest, and that's it. And that's that. But, I mean, this literally took off, gone, absolutely gone. And as you guys probably saw that earlier this afternoon, took off, absolutely out of here. Okay. So that was just a really good trade. That was just a really good trade to take, honestly. And I was asleep, and I actually missed it. So, and that's the one I was talking about earlier in the call. Like, if I would have seen that, that would have been the time where I may have done a slightly bigger lot size than normal. But keep in mind, even when I do that, it's still premeditated. Like, I literally, in my trading plan, say, I normally will trade off these confirmations, and if it happens to be all of my confirmations, plus I feel intuitively good about it, I'm going to just do a little bit extra. Not full margin, not risk the whole account, but just a little bit extra. If you know it's a perfect entry, you can do that because you know it's going to go instant profit. But if it's not a perfect entry, you can't just risk it on a limit. Like, limits are like, you don't know for a fact. The whole point of limits is get the good risk to reward, but you don't always know it's going to hit on the limit. But seeing the 40 pip 1 minute wick rejection right there in that order block, 3 time frame order block, sweep of equal lows in the trend going up, I mean, I'm willing to enter a slightly bigger position just because I know it's going to go instant profit. So that's just from my back testing. I've never seen that exact thing not go instant profit. Even if it's a loser, it's still going to go 30 pips first. on gold. This is on gold. Not normal Forex pairs don't move like that. Unless it's like one of those even those Forex, what is it, a cross? Is that what it's called?
Forex crosses.
Or like the NZDs and the like NZ or GBPs and I don't know. But I mean, unless there's some crazy market conditions, no Forex pair is moving like that. Unless there's some crazy market conditions, unless it's like Brexit or something. Yes, on this example, the only time to be honest, I will do, I'm more of a buyer. Like almost all of my trades are gold buys, like almost all of them. So sells, I typically have found that sells are better for limits.
Yes.
I've just found that to be true, but either buys work too. I mean, if you like limits, there's nothing wrong with that. I personally there's certain candle confirmation that I know and I've back tested and I've always traded candles so that I feel more comfortable entering. Now, if you don't feel comfortable entering a trade, don't enter it, okay? Now, me personally, I don't like putting risk in my account if I don't know for sure it's going to reject. But if I see a rejection in the spot that I wanted it to reject, then I'm going to go ahead and take a position. I'll feel more comfortable with it. That's just me personally. That's how I trade, okay? Certain times, but if I do, maybe there's a time where like I'm busy, traveling or something like that, or maybe it's a good swing trade, then I'll put a limit, but it'll be a smaller position. To be a smaller position. Like if it's a swing trade, I'm not doing the same size position unless I get the candle confirmation too. That's kind of how I do it based off what I've done and back tested. Share those. Okay. Yeah. Sell limits are pretty nice. Sell limits are pretty nice. But I mean, keep in mind here, like we're trading a small chunk of time as well. Like especially a lot of us here, less than a year in trading, we're seeing the current market conditions and realizing that the market conditions can change at any time. So even, I have the same basic concept of my trading plan. It still can change on a week-to-week basis based off of the volatility in the current where market is at. So keep that in mind always. I mean, you guys saw that in March. In March during Corona, I mean, gold gave 150 pip 1 minute wick. Like that is not normal. You can't enter a normal size position on that. I mean, gold was making 500 pip daily candles like 6 days in a row. Like that is not normal. That's not normal at all. I mean, guys, a year and a half ago, when I started trading, gold's daily range would be 40 to 50 pips. And then once a week it'd do 100 pips. That's when I started trading. That's how gold was. Now, if you guys know gold, I mean, gold will give you 300 pips on a pullback. Now, I mean, you can't even enter off of a candle smaller than 15 minute, 5 minute. Otherwise, you got to put like a 60 pip stop loss, 100 pip stop loss. Like, and I don't like to do that. Yeah, December, gold took off. I mean, the thing is, guys, we got to realize that, and I don't know if you guys know this, but keep this in mind. Dollar's in a recession. One reason gold's gone. Number two, I don't know if you guys know this, Trump did something regarding buying gold and making that possibly the new currency or something. There's some type of words in there. I don't know all the details, but like that stuff going on is just telling us that why would gold not fly in past the all-time highs? Like, why would it not? Okay. Like, think about this. Like, in the time of everything's going on, DXY dollar is announced in a recession. Now look at it. It hasn't even dropped that far yet. Like gold took off to 1700 while the dollar was still moving up. So what's it going to do when the dollar tanks? Okay. Keep that in mind. Now keep in mind as well. We have some key points of interest to be taking this gold buy on. Now, if you caught that FOMC trade, I would be holding a partial position. It's not the best position, so it's like I wouldn't be holding that much of it. But like, here's the thing that I've learned that may help some of you is that when you catch a swing low, you hold more. But like, if you catch a continuation, like there's no telling you that that's going to keep going. Like back last year, I was trying to swing by gold in the 1300s, knowing for a fact that it was gone to 1500, 1800, which I was right because it was so obvious and I just felt intuitively true. But I kept trying to go deep and go break even on every entry. And I probably 6 times in a row was 100 pips in profit and went break even. And my account was at the same size like a week later. And I'm sitting there, I caught 100 pips like 6 times, and I could have, you know what I mean? So it's like, keep that in mind. If you caught this entry down here, then hey, you may want to hold a good amount of that, and you probably would have just taken a little bit of profit there. You just got 500 pips. But like if you're catching buys like they're like you're not really holding, you're more just taking the intraday. But like if you come here and grab this, okay, you might want to hold a good amount of that. Like keep that in mind. Keep that in mind. It's never just going to just take off randomly, and if it does, you don't want it anyway. You don't want to just, well, I know it's going up. Better push buy. You know, for those of you on here that are new, I used to think, hey, the market goes up or down. I didn't know the concept of entries. Just because you think it's going up or down doesn't mean you just enter. Like you have to wait for it to get to your entry area, and then you enter once you get what you want in there. At predetermined risk. So gold, I don't really see too much cleanly on the sells because like, I don't know, like my eyes are trained for gold buys. So I don't even know what I'm looking at here, but there's something it could possibly play this. It's not really the cleanest order block or whatever, but there's a nice imbalance up here. There's some equal highs right here. You know, there's a couple areas where it could come hit, but another thing that I have learned is that even if it goes to your entry point, if it's like super swing high or super swing low, it's always going to come back and mitigate something. So you don't have to catch it out of midair. Like I know everyone's like, they love catching the perfect snipe so they can screenshot it and put it on Instagram and share with everyone. Like, hey, do you want to make the most money, or do you want to catch the most screenshots? I mean, because I used to be so caught up in trying to catch the perfect entry. It doesn't have to be perfect, guys. Like if you catch the perfect, and even if you miss the perfect entry, it's still going to come mitigate on the smaller time frame. So you can wait. And a lot of times it's not for like later that week. So for example, on gold, I'm going to give an example, perfect example of this what I was just talking about. So during Corona, we had this major drop on gold, major drop, huge drop. We found the low. We didn't catch the low. We really wanted to catch the low. Almost upset we missed it. Now what happened? It took off, and it came back by the end of the week and gave us a perfect 15-minute mitigation here. Right here, you grab that one. We called that one, and then boom, it takes off. So like if you miss it, don't just wait. Like just wait. There's always another trade. Like you don't even have to catch another trade today or this week. Like there's always another trade, and it's always going to be obvious. And at the end of the day, when you're taking signals, if you don't feel good about it, don't enter. No one's making you push the buy or sell. You're the one pushing the button. I don't care if it's the best trader in the world or whatever. You don't have to enter, okay? If you feel good about it, you agree with it, go for it, okay? I think that's it. So otherwise, gold, I was saying a couple of times, down here is the first kind of area. We don't really know how long it's going to take to like, this could be a pretty long range. I would like to see it come low. I would like to see it break all those lows. But if it doesn't, then I'll wait for it to start up a whole new reaccumulation cycle or whatever it's called. For those of you that trade Wyckoff, I'm not too fancy on all the details. One thing Luke Longmire taught me, he's a multiple 7-figure trader, and he puts 2 lines on his chart, and that's it. So like, just because you know everything about the market does not mean necessarily that that's good. Because there's this thing in trading where over-analysis can make you overthink things. And make you think it has to be perfect. And then like you literally just have to have an edge, and then you use risk management. Like it doesn't have to be so complicated all the time. Yeah, so Luke Longmire, he trades a little bit differently today than he did 2 years ago or a year and a half ago. A little bit differently. But the concept I got from Luke was trading at the beach, not the ocean, meaning zone to zone, meaning like you're not just trying to catch random things in the middle. You wait for it to get to a zone. That's what I got from him, and I got candle confirmation from him as well. And he recommended Japanese candlestick pattern, JCP, the app, JCP. So like what I'm saying here, I mean, if you look on the 4 hour, for example, on the 4 hour, if I know the swing high is technically, I would say up here, and the swing lows down here, now that we're down here, I'm not looking for sells until it gets up here. Okay, I'm only buying until it gets up there. There's no point in trying to catch a little pullback when you know the swing highs up here, swing lows down here. Until it rejects the swing high, I'm not looking for sells. Now it got pretty close, but that doesn't look like anything I would want to enter. Okay, so like that's something that's going to help you tremendously as far as clarity. If like you don't have to try to catch things at a midair, and even if you do catch it at midair, it's not going to be in the middle of a range. Okay, so like US 30, why would you try to? Oh, it's the high. I better sell it. Like no, like now that we've seen this, potentially you could convince me that you might be looking for something up here, but like why when you could just catch the buy up there? Why would you even try to catch the sell? It doesn't even make sense. It does not make sense at all. Because and think about it from a standpoint of institutional money, like we're the bank's money. If the huge move just went up, that means all the money's in the buy. So you're selling against all that money. Until they grab some other money to tell you it's going the other way, why would you even try to sell against the money or buy against the money? It doesn't make any sense. Okay. And that is, I believe that's all. US 30 is approaching the area. It's approaching the area. USD JPY is kind of approaching area. That's pretty much it for me. Now, who on here was it? Were you have something to go over, Kyle?
I mean, I go by, that's right. That's
Mm-hmm.
what I go by.
Yeah. Kyle had a limit on there, missed by a pip. Gotta love it.
Gotta love it. Thank you.
You gotta love it. Hey, but mental wins are better than trying to force a trade because you think you missed it.
True.
Mental win's a good one because it's confidence for your next trade. So you want that. You have to be confident as a trader. You have to be confident. Mm-hmm.
I think another thing when it comes to mindset is like, and not just with trading, but with a lot of different things, like those mental wins is so important. I think in so many different areas. For example, it's just your yeah. What's good, everybody? What's good, y'all? Good to see you guys, man. Yeah, Slick. What's good? What's good, y'all? How you guys doing, man? But something that I've learned that I think is very important, and this can be used for anything, but like those little mental wins, like it's not, or like say, okay, you know what, I'm gonna give up this for 30 days, or you know what, okay, I'm gonna do something. You're gonna take away something or add something that you're just gonna stay consistent with. Well, it's not necessarily with that thing that you're doing, but it's more the mental win that you just proved to yourself that you were disciplined, that, okay, you just proved to yourself that I just did this, right? So now when we're, right, because we're changing who we got to be. And so when you can actually physically reaffirm, okay, you know what, now I just proved to myself, now that's physical proof that I just did this. I stuck to my word. So now, you know what I mean? When it comes to whatever, it could be whatever, you know what I'm saying? But like, it's just that mental win about, okay, you know what, I actually stuck to. It's not the fact that like, okay, say for example, like, oh, I want to stop doing this for 30 days. Like, it's not the fact that you're taking away that substance or that, or the thing, but it's the fact that you just stuck to your word. You know what I mean? Like that. And that just reaffirms that shit. So you can use that with anything, man. But dude, that gold buy limit, dude. Oh my God. I was sick. I looked at it, dude, and I was sick. It's okay though. It happens, man. But it's crazy, dude. It's crazy, man. Oh, yeah, we got 56 people on here. Oh shit. Yeah, guys, man. I mean, Echo Man, he's a legend, dude. He's a legend in the game. We're lucky. We are lucky. But in the chat box, if anybody has, okay, we got it. We're recording during recommend from Luke. Okay. Echo, did you already answer the recording from Luke? Someone asked for a recording from Luke.
Oh.
Yeah.
Yeah, I don't. Because ever since, I mean, I watched Luke like right before Gold Cup came out and right after Gold Cup came out. So like ever since Gold Cup has been a thing, like he shifted from like Luke Longmire to like Gold Cup, so it's kind of different in a little way because it's his app. So there's certain different things that, see, when you become an educator for a product or a service, there's a certain, it's different than being a normal educator, because you're calling out trades. So it's a little bit more systematic than normally. But yeah, recently, I don't know what recording you probably look and find. Luke Longmire was someone that I watched more last year than this year, for sure. Probably more so even like the end of 2018, which is kind of a while back, to be honest. But that's where my trading strategy derived from, was Luke Longmire, 100%. 100%. Luke Longmire was that. And then once I started learning some smart money with Zach and Jordan, which I'm still not so deep in all the details of it, because I like to keep things simple. And, I'm learning as I go, but I know enough. You know what I mean? You don't have to know everything. You have to know enough to and organize your mind. Like, you don't have to know all the charts don't care what you think's going to happen. They literally don't. They don't care if oh, well, I was right last time. This one's got to be right. Oh, I've lost 5 in a row. There's no way I'm losing 6 in a row. Trust me, I've thought like that before. Like, I'm telling you guys right now, I'm telling you, in 2 years, I've had a time where I lost 13 in a row, and I've had a time where I won 16 or 17 in a row. Like, those stretches have happened before. So, like, I know that even though you think you're right, market doesn't care if you think you're right. So that's what I'm gonna say. But pretty much, Hassan, did you have any setups for tonight, Hassan? Did you?
Yeah, man. I'm just actually looking through. I look for, later on. I don't take no trades right away at night, guys. You know me from before. I usually just I do. I like doing limit orders, whether they're buys or sells. But it's funny because like we've been talking a lot about that too. How like me and Kyle, we just like naturally just automatically look for sells all the time. And it's funny because Jordan always he has the buys backed up. And so I like sells because if you guys didn't know, also with sells and buys, so anyone that missed their like snipes, their perfect entries and whatnot, spread, right? When buys are if you're looking to buy, that spread, that top line has to come touch your entry, right? And that's what's going to activate you. So you need to consider price going 2 pips below your entry, right? So if you're looking at an area, like let's see like this Euro-Usd, right? If I'm saying price is going to come to 1.1279, okay, price is going to be that bottom level. So if you're in a buy and you have a buy limit per se, you have to have that top level actually touch your buy limit, right? So what I would do is, what's up?
You can share your screen.
Oh shit, my bad.
You good.
Whole time I thought, yeah, my bad.
Go ahead.
Whole time I'm over here ugly. Yeah, can you actually give me able to screen share? I don't have access. I'm over here talking. Yo, Jordan, can you give me access to screen share? Yeah, shout out to you, Kalen. There you go. Thank you. Yeah, there we go. All right, so Euro-USD. Here's an example. I'm not looking to buy or anything right now, or even send out a limit order for this, right? But just a little quick educational video and whatnot. I use fibs too, guys, for extra confirmation. I love the 0.79 personally for gold sells. It like wicks it to a T. You can ask Jordan, you can ask Kyle. That shit is fire, phenomenal. See, but here for an example, right? I'm looking at Euro-USD. And let's say I wanted to put a buy limit. So just so you guys know also, so you don't miss your snipes if you're looking to snipe and everything, right? If I'm looking to enter 1.1279, I'm going to put my entry order 2 pips or 3 pips up. Always look at your spread, right, for the pair and kind of think of the average spread that it normally has around that time and say, okay, spread's about 3 pips. So I'm going to actually put my entry 3 pips above. I'm going to look to enter right there. right? So that way, you know, your entry can actually get filled in, and you don't get upset about, you know, missing the trade, you know. But sometimes we miss it still to a pinpoint, you know, so that's okay. That's the love of trading. But here's the trade I'm looking at, and I'll go over it into detail. Now we could come lower, but see what I like to do is, okay, what's price and what's time doing, right, together, you know, at the same time. And so I like to follow the big moves, these big swings, right? Why? Because that's when the most volume is entered in the market. Why? That's because that's when the institutions, the banks, the big players are in, okay? So look at this swing per se, for example. Whenever we were actually over here, I was looking to enter off this candle around this area, right? Because this was the last buy area, and I had my fib all lined up and everything, okay? But what I didn't notice, and if you guys know smart money, right? Price comes back down to those sell orders or those buy orders, whatever they have. I'm not going to go too much into detail right now with Zach and Jordan. But basically, how I'm going to explain it is all the charts is controlled information, and it's like filling in code, basically. That's the way I see it with these candlesticks, that it's filling in code, algorithm, okay? And so if you guys notice right here on the smaller time frame, there's people, right, making opinions over time that it's going to be a buy area right here, right? Support, support, and then it breaks support, and people are starting to sell. That's how people are taught, retail traders, okay? But if you notice in this area, it pretty much touched that last sell candle before the buy move, also filling in an imbalance. If you go into the smaller time frame, and we're going to actually go into the smaller time frame. Sometimes, guys, you go into the smaller time frame not to enter, right? To dissect. I like to dissect these charts, okay? If you go into the smaller time frames, you'll see even clearly, all right? Look at the time right here, 6:25, right before New York session open. 6:25 for me is Central Standard Time, so 7 o'clock is New York open, right? So 6:25, right before New York open. Now, we did make some equal lows and everything, but it came into an area, right, of touching that last sell candle, and these last sell candles coming up all together. And look at the time of this area, right? So if the banks, it doesn't matter also, what you guys have to remember is that the banks are still playing at the smaller levels. They're controlling the information with smaller volume, right? So if we look at time, 8:20, right? A.M. Again, New York open, right? What happens? A big move, okay? The banks are obviously involved. They're planting their seeds, their triggers, right? So if they're pulling back, right? And here's the trigger, it's pulling back, and they're just planting their seeds, you know, manipulating, going up and down, up and down. But at that time, 6:20, again, right before New York open, a big move happens, okay? I want you guys to notice something right here too. They come back to fill in that imbalance, this unhealthy price action. And if you guys just see this, pay attention to this candlestick. And again, I'm not going to go too far into detail because I don't want to waste too much time. But if you notice this candlestick, and I'm going to go before here in this time frame too. Before it came all right here, right? Price didn't fill in any of this candlestick body. You see how I marked this up? And I'll even go up to here to kind of make it kind of more clear. You see from this wick to this wick, price did not get filled at all, right? I'm going to show you guys something. Do you see how there's money right here sitting, right? And it got screwed over through this thrust. You see where this thrust began, that last buy candle that finally kind of pushed down again? I'm going to show you guys, if you just line up that imbalance right there. Actually, I'm going to start right here because that's actually when you see that thrust down. you line up that imbalance and it's coming still into that unhealthy price action area, this imbalance area, okay? And this is the thrust that pushed price down, taking out all these sellers, right? Because you got to remember, people are, okay, buying right here. Oh, okay, bet. I'm going to buy again right here. I'm going to buy again right here. And they're probably putting their stop losses break even after, you know, now it's in profit. Awesome, I'm in profit. They're thinking it's going to break these highs up here, right? Similar concept because it's such a strong support. 1, 2, 3, right? And look what time it is too, guys, when there's no volume in the market. 22 o'clock, so that's 10 o'clock for me. 10 o'clock, right before London open and everything. That's still 4 hours, right? Not much volume. So opinions are forming in a less volume market. Banks aren't involved. But look at this thrust, right? 1 a.m. right before London session, okay? Boom, pushes down. 2 a.m. we're playing around. 2 a.m. we're playing around. We plant the seed around 3 a.m. Still a high volatile session, right? Okay? But whatever your preferred trading time is, okay? So 7 o'clock is mine. Okay, look what happens. Price comes down at 7 o'clock, 7:35, open of New York. And if you come to your charts right before that hour open, okay, what happened during London? Boom, this happened. This is the imbalance, right? Where's the targets at? You know, if we're getting evidence, look, there were sellers right here in this candlestick. Boom, big move, took out the sellers. And if you're noticing that the market is shifting down, where is it going to go to? Okay. Now, we don't have to look for the perfect entry always. Okay. If you want to play off that candle that I just showed you, have your stop loss around there. You're still risking 26 pips. And then boom, aim for that high, if anything. Okay. And then you can even backtrack. We're going to have to go into bigger data. Oh God, I went too far deep. You know, but basically, guys, I look for 3-to-1 trades, right? So you don't have to go for the biggest bag. Just make your trade 3-to-1. All right. So I'm going to aim for, I don't even know where I was. I'm sorry, guys. I messed everything up. Okay. But I risked 22 pips, right? So what's 22 pips times 3? 66 pips. So automatically my first target to make it a 3-to-1 trade and follow that consecutive trading plan, right, is 66 pips. No matter what, I'm not going to hold the trade. I'm looking for what setups are happening right before New York session, right, with all the evidence lining up no matter what, right, that last support, that last break, okay, money getting taken out. If the evidence, if you follow what Zach and Jordan teach, is all lining up, okay, then most likely you can get a quick bag. It could be 66 pips. That's okay. It doesn't have to be 100 pips. Okay. If you guys are aiming for $100, $10, these whole numbers, you know, let that go, because again, that's a psychological number that you're just playing with inside your head and everything. So 66 pips is okay. 78 pips is okay. 73 pips is okay. You don't have to wait 2 more pips and then watch it drop because you just missed out on 2 more pips. Put a 111 if you've missed your TP or your stop loss or whatever got hit because you were putting your numbers at these whole numbers and whatnot, right? If your trade is 3-to-1, okay, no matter what, I don't care if it's 66 pips, even if it's 55 pips. If you guys see a setup lining up at time and you're looking at your confirmations play out during time and everything, okay, and it's a quick 3-to-1 trade, even for 66 pips, use proper risk management, okay? You might even get to boost your risk management up because you're only risking like what, 15 pips, 22 pips, you know, whatever, okay? And just take the trade and exit and take the bag. How many guys have missed their trade? Put a 333 in the chat if you've missed your trade, right, just by 10 more pips. Okay, and you perfectly executed a 3-to-1 trade, and in your head you knew, boom, that was a perfect setup, a perfect entry, a perfect, proper risk to reward management, 3-to-1 trade, and I can take my bag right here, but you held it, you removed that TP, and you held it because you thought you were a sniper and you just kept holding those trades. 3-3-3s. No one? Okay, bet. Okay. Sheesh, okay. Y'all must be, okay, discipline right off the bat. Good, because that's what we teach here, right? Now, let me guys show you something real quick. I like to follow the bank moves, right? So look at this candlestick area right here. I like to use candle fibs for confirmation as well. What time is it, guys? Yeah, Jordan, if you have any trades or any of your alerts, let me know, because I mean, like right now, I'm not really looking for anything. I just like to see how things are lining up in London session and what evidence is going on right before New York when the most volume happens to get my quick bag in and out, right? And Zach and Jordan talk about it too, right? So this was the move that broke highs and continued to break highs. And I like to use the fib also as an extra confirmation. And I use the 0.79 and 0.88, okay? Just because I know that this candlestick area was an institutional move at the right time, right? And lining up with all my confirmations and made a big move, okay? And doing what it says, broke equal lows, filled imbalance in, and continued to break more highs. Okay, watch this. Almost to a T. I think it was a 0.88 right here. Oh, sheesh. Sheesh, look at that. On the 0.88, right? But sometimes I'll just automatically, if you guys could just spot it out, I'm going to look to enter off imbalances. 0.79's right there. 0.88's in between. There's an imbalance right here. Sheesh, my bad. Look at this. Imbalance in this area. Look at this. This is a support area, guys. I mean, a resistance. What happens? What do retail traders learn also? Like, you know, and this is stuff that you can learn. You can apply from retail trader strategies and apply it with your smart money strategies, okay? Whenever a resistance gets broken, see my lines on it? It becomes a support. And we're going to see, oh my God. Boom, wick entry, support. This is a support. Why? Because the banks are supporting it right here. It's another institutional move. Look what time it is. It's at 3 a.m., right? So again, London session, but still during a volatile time. And if I'm not mistaken, 3:30 for me, I don't know if they open actually at 2 a.m. for me, but I believe London indices, stocks and whatnot actually open at 3 a.m., 3:30 a.m. Just how stocks open up for 8:30 a.m. for me at my time, I believe it's the same thing for London. It opens 1 hour after. If I'm wrong, 1 hour and a half after, right? So if I'm wrong, I'm wrong. I don't know, but that's what I kind of believe because I see moves happen at 3:30 all the time, okay? Again, another volatile session, right? And look at this, guys, right here. Everything's lining up. Equal lows. They got taken out. You guys, some of you might enter it off of here, looking at this area. That's okay. But, you know, I always look for imbalances in my fib areas too. And again, you want to dissect. You want to dissect these imbalances, and you want to go into only use smaller time frames to dissect. That's it. You're not going to dissect all the way over here, right? You want to look at the bigger picture because, again, we're on the 5-minute, but I'm at like, what, June 4th? What is today? That was like a week ago, okay? I'm not looking at what happened an hour ago unless it was like in an institutional move area, like right away. Keep that Euro-AUD if you're new, kid buy, hold if you're in Jew, sell, hold. Yes, sir. Thank you, Jordan. Thank you. Yeah, I'll check out that US 30. I don't really trade US 30, but I'll check that out. But you see, guys, and again, perfect entry. Time is lining up. And look what happens. It broke highs. So that's why I'm kind of focused on this candlestick because it's still following everything. Last move happened during a volume market time. Came to institutional areas, what I believe are institutional areas, doing its thing, right? Breaking lows, breaking highs, filling imbalances at the right time. Okay, so I'm going to follow the institutional moves till I have evidence of sells. All right. And again, if you're just looking at the bigger time frame, we've been bullish for quite a while since down here. Well, that's May, since Corona, pretty much. And at this moment, like, you know, there's no evidence for me until sell. We got a nice reaction off of here. But again, guys, when you see these reactions off imbalances, they're just filling in code. So again, like Jordan said earlier, don't get attached to the trade. You guys see right there, boom, look at that. That could be actually a nice sell to hold. And you look at the 4 hour, look at that imbalance right there. You guys see it? I already see it right away, but I don't even need, I'm gonna zoom it in for you guys. Like literally guys, I'll go like into the 1 minute like time charts and like, you'll just know when you can spot imbalances, like when they're all smushed up right there. You guys see it? That imbalance, that unhealthy price action, right? So imbalances or unhealthy price action was basically in this 4 hour candlestick in this price area, it was all selling, okay? All selling. So if this is an algorithm, right? And robots like following perfect algorithm, they have a code, right? Perfect algorithm, okay? And it's an unhealthy algorithm right now. What's gonna happen? It's gonna fill in the code and make it healthy again, right? And so if you just notice, I'm gonna make this extended. Boom. And you see, wick entry. And again, guys, when you're looking for these entries and you're like, you know, for me, I'm an intraday trader. What I would do if I get a nice entry like that, let's say we were in this time frame and you guys sold that. Let's say you saw that, right? I'm going to discover this wick area and everything because there's probably imbalance. Well, in the smaller time frames. Okay. So this is what I'll do. Since this is just a wick still, this last support, right, is an indication where people might buy again, right? Or this is just basically, you know, if you guys know what like head and shoulders are, the big moves that can, you know, basically indicate continuation after the right shoulders form is if that right shoulder is basically lower than the left shoulder. So even if you're like taking a sell right here, automatically I'm going to take profit like down here, even for like 60, 70 pips or something. Okay. Because you got a nice entry, you got your quick bag for the day. You know what I mean? You don't have to hold it for long. But this is actually looking like it's continuing down. But where to? Fill in an imbalance. So even if you held that sell, you could put it right there, your target. Taking down this low and filling in this imbalance. Okay. But again, I'm looking for a buy on here. I don't know when it will happen. We have some imbalance. The buy could actually happen right here because the imbalance is very evident. And you can kind of see how this candlestick came back down and wicked this last sell candle that took out the liquidity right here. So if you guys see, there's the equal lows, which was the candle that did its thing. It was this one. And you can kind of see how it wicked and mitigated out already. So we could get an entry right here. And that's okay. If I'm looking for an entry right there, boom. It's about 40 pips. I would go probably no lower than 30. Depending, you could go for 40. And if you're expecting a continuation, aim up to go to those highs, right? Boom, that's a 4-to-1 trade. I'll even make it a 3-to-1 just so we're in and out. 100 pips, right? So if you're risking 35, that's a 3-to-1 trade. If 35 pips is too much, lower your lot size because you're still going for 100 pips, which is still pretty much good. It's a bag. And we're looking for that imbalance fill. But again, I like to dissect and go into the smaller time frames. What other pairs you guys drop? Euro-AUD. That one's way off. GU, I'm not really interested. I'm gonna go on my favorite pairs. Yeah, this one took off and took out my SL like crazy. I only risked 11 pips on this one. That's okay. But look at right here. I was trying to get a perfect entry right here. We barely missed it. You see this imbalance. Here, I'll zoom in. I believe, no, he did not. Imbalance perfectly right there. Boom, wicked inside, retested, tested, and took off. Boom, 3-to-1 trade. Look, I'm going for 60 pips and I'm risking 20 pips, right? 3-to-1 trade. To follow a compound plan, win every day and grow that compound plan and grow that lot size. Easy trade, easy win. Filling an imbalance also right here. I don't see anything right there for that though. I don't like trading in the middle of the ocean. US 30. Sheesh, I'm looking for a long time ago though. What was your price area? Your CAD. Yeah, I think low key. Did that just happen? Yeah, I'm gonna look at it right now. Hey, take this off. Oh my god. US 30 is looking nice. That was a nice sell. I'm gonna go to your CAD because he just pointed that out. Oof, that's actually what I was looking to enter as too. So yeah, your CADs, you guys notice, quick little lesson. Boom. Money sitting right here. Money's for me right here. Look what time it is. 1 a.m. right before London session. Boom. London session pulls the trigger to continue down, breaks lows. This is the candlestick we're focusing on. Let's look at this candlestick. This candlestick, what does it do? Took out all these people. So yeah, you guys could look to sell your CAD. Now I know that doesn't line up with the evidence with the buy for USD CAD because I find that CAD pairs correlate with each other at their trigger areas is what I call them. Oh man, Euro CAD. So we missed entry. I have a limit there by 5 pips. That's okay. There's an abundance of entries. But let's look at this real quick because what time is it? 1:30 or something? My phone died, so I don't know. But yeah, let's look at this real quick, guys. This candlestick, what it do? Take out highs. Continue down, left imbalance. You guys see that? I'll zoom in for you guys. I always keep track of imbalances, right? On the 1 hour. And if we go on the smaller time frame, it'll be even more obvious sometimes. Okay. Just giving you indication that the unhealthy price action is going down. When that happens, that basically means, again, that there's all selling going down and that the volume's really increased, right? And so who's controlling the markets? Who makes it move that fast? Institutions, okay? The banks, right? If they're controlling the markets, if they're the ones pushing the markets ultimately, then we're going to follow their moves, right? They lose, got taken out by this candle, right? So again, we're focused on this candle that got taken out, okay? What happens to the buyers? Now, this is interesting, though. Because what is the low on this? It takes it out by the pipette. And you guys see right here, well, in the corner right here, it'll say the low. But I'm going to put my thing right here. 0.50549. 0.50547. Okay. So this basically was 2 pipettes away from taking out this low, right? But this was a dramatic move. Taking out these trend line people and taking out these continuation trend line people that were all buying, okay? So ultimately, there's a small move right here. And I actually I had this sell right here. I don't know if I actually called it out. Everything was lining up. Look what was happening. It's coming by that imbalance area. It filled it in actually right here. But equal lows were starting to form. And look what time it was, 1 a.m. And again, that's why I like going to the very, very small time frame, guys. Where was it at? I'm gonna go on the 5 minute. Oh, and this is another thing I consider too, guys. I look at the recent high on these equal highs. Okay, we can't go by that far, so we're just gonna use this candle per se. That's the last wick. Which candlestick came up there and really filled that last wick, or destroyed that last sell area? Okay, right here. Again, this is just the focus area anyways. So this is the candlestick, right, that had that thrust. Okay. But you see, this is that last 5-minute candlestick that had that thrust up to take out these equal highs right here. And it's just looking very clean for a big move up. And then, so I like that area. It's lining up with that candlestick that thrusted up, that took out the highs. And you see right here on the 5-minute, there's imbalance. And I like to go like in the 50% of the imbalance about sometimes. Okay. So guys, you can't go too deep into this, but this is just stuff that I do to know that this is my area of taking the trade. And there's like, this is giving me extra confirmation, because if I'm seeing wicks all filled in, then I'm not going to really take the trade. There's healthy price action. That healthy price action is where retail traders are trading. So healthy price action gets taken out, right? There's already healthy code there. So it's not looking to fill it. It's taking to go through it because it's making more unhealthy code basically, right? So that's why I kind of go into the smaller time frames to really look at an area where the candlestick did that thing. Okay. And then, so that's where I'm lining it up. And you see that, yeah, that area still got filled in. But even if you go up right here, that would have been a nice entry. Even right there. See, we dropped what? We did drop over 20 pips. So obviously if we go and break even, you know what I mean? But look at this. Look what time it was. Oh, it was 9:50. How do I caught it right here? We did. So we probably would have hit break even, but you could have got a nice area to re-enter, right? If you still believe that the trade's valid for you. And again, it came up again around 1 a.m. And sometimes that'll do that. And you got to think, a bank came and released its trigger. Some banks release its triggers, but you got to think there's other banks in the thing, in the game. So they come back up and they continue their moves as well. And they're the ultimate players. Okay. So again, I was looking off this imbalance area to see what happens. I would like to see price come up here to fill in this imbalance area and make that right shoulder. Here's a left shoulder area, left shoulder, right? Left shoulder, head, and then filling in that imbalance, that right shoulder. But yeah, your CAD's looking nice. Good point out, Jonah. I was looking at that as well. But it is coming, yeah, kind of wick that area pretty nice. It would be like what? It's only 11 pips away. Still, I'm going to wait for time. It might come back up there. But it did wick, technically, this thrust area, right? These candlesticks that thrusted, that took out that high right here in that liquidation, right? And filled in more imbalance ultimately. And even right here, I'd look at to enter even off right there. That's actually where I entered off of. And those wicks. But let's see what else we got going on. Anyone else got any pairs? Let me see the chat box. Will we get signals? Well, we're like I said, I'm not really looking to send anything out because I don't see anything today. And that's what it is, guys, is that you guys got to be patient. What right now is what I'm teaching you guys some information that's going to help you align with how to approach a trade, right? Signals wise, though, some moves kind of already happened. But then again, chat, GBP, JPY. Gold actually made a nice move right here. Right there. Again, that thrust. Doesn't have to be necessarily that first candlestick. It could be that thrust. Because then if you go in the 2 hour, last buy candle, that thrust, wick entry. Boom. And then I would, if you're in the sell, you know, look for imbalance. That thrust. That came down to fill in more imbalance. Bank move. So I would take profit right here. Perfect entry, perfect sell. That one's too late though. Someone said GBP, JPY. GCAD. Sheesh. Ooh, GJ. Yeah, if you actually look at GJ, I drew this up right before. Took out all these people right now, as of right now. Or as of, what, 3 hours ago? 4. Came to that last thrust that hit that last sell candle. There is still imbalance there, but again, you don't have to look for the perfect entry. GJ's looking nice, but I kind of want to have more evidence that we're going to buy first. That is a nice little wick rejection. But even on the bigger time frame, I'm not looking to buy anything. For me, myself, I don't. Caught GJ in a 30-minute imbalance. That's okay, but yeah. So if you got that re-entry even right here. Yeah, right there. Yep. That's good. And also that little thrust again down, that push down. Shoom. To fill in more imbalance right here, if you guys see it. But again, you know, this is all in hindsight. But when you guys do this in hindsight, you're saying, okay, I'm seeing how, okay, it's filling in code. Oh, look what it just did right here. Okay, so now I'm following the trail of what the banks are doing. And now they just gave me a big indication of that's a move. This is an area that's following that trail. Now I'm going to look to play off that area, that candlestick that's following that trail. And then the banks did its thing in that trail, right? Now, not all the time it's going to be the move, but that's something I've noticed in the way I trade, and something I noticed along, like, from learning from Zach and Jordan. They personally haven't said that, but like that's something I kind of discovered, that you're following their trail. I'm pretty sure they say something along those lines. But GJ, you know what I mean? You're going to get a reaction off of it, because that's what it is. It's code filling in. So you'll get a reaction off of it. It might be 20 pips, 30 pips. Imbalance, guys, you'll still get a reaction off imbalances, which is nice. But how many times have you guys got a imbalance? I don't know who trades in here imbalances like that, but how many of you guys got a nice reaction off of imbalance code, right? And you thought it was the move and it went straight into profit, okay? But there was all this other targets that it's going for, and it's in a bearish market. Drop a 111 in the chat if that's you, because that was me, right? Again, I'm getting attached to the trade, okay? But again, if it's just 20 pips, what do? Go break even automatically, because we have to follow proper risk management, okay? I can go all day into hindsight about what has happened in the charts, but I'm just showing you moves that you can play out in the market that's giving you the best indication of when to get into the markets, make your best 3-to-1 trade, get in and out, and that's it. Call it up, right? Because if it's the trade we're looking for, right, then we don't have to worry about it coming back down to break even. Because if it's the banks being involved, guess what? They're in and out, okay? Now, if it comes back to retrace your break even, then more than likely, sometimes it's not the move. Now, your CAD, we saw it happen once in a while, but it's not going to be every time, guys. So GJ, yeah, it's looking nice, but honestly, for me, I'm not really looking to follow that as a buy. For me, it would have to be more so price action. If anything, filling right here. But again, if it fills in right here, then it's just following healthy code. So if you get a reaction off here, don't, again, get attached to the trade. You might get a reaction off here just to destroy these lows, and then fill in what? Imbalance either here, imbalance either right there, that little small. And again, because all it is, guys, is like filling in code within its current price action with whatever's going on in the market. Okay, that's the way I see the markets. I don't know if a lot of you guys see it the same way. If you do, go ahead and drop on me. But you know what I mean? Just filling in code to code, imbalance to imbalance, right? You see that imbalance right there, guys? And who knows, we might. Because look at this, last support. Some of you guys know the break and retest, and they'll fill in that code, that imbalance, and they'll continue to move down, right? But for me, I'm not too strong on GBP, JPY buys. I like the wick that it made, but when it's just like consolidating right here, unless, like I said, we get a strong reaction around that candlestick. We get a strong reaction off here, okay, then I may look to buy. But I rather see a strong reaction, breaking all these highs, making some kind of imbalance, lining up for 7 a.m., 8 a.m., or 6 a.m. to giving me more indication, okay, this left imbalance, right? You took out some highs, okay? Look what time it's about to be. The market's slowly coming down to my point of interest, okay? And then, you know, if it follows your trading plan, 3-to-1 trade, I see another potential target that it could smash, and I'm risking only 20 pips, 30 pips, right? And I'm usually going for 3-to-1 trades. I'm gonna take it, okay? So I'm not really looking, you know, I'd rather see a reaction first, because all it did was just, it didn't break no highs yet off this imbalance reaction. So we could see it come down lower, or again, we're just waiting for banks to pull the trigger and unlock it, that wick, that imbalance, and boom, take off. But I would like to see, personally, me destroy these highs, probably even here, fill in this code right here even. That imbalance, even look to sell right here. Probably not, actually, never mind. Get a reaction. All you guys are going to see reactions off these imbalances if you notice these markets. Okay. Is there any other pairs, guys? Yeah, is there any other traders that want to go on? Jonah, can't go broke taking profits and break even. Yes, sir, Slick Rick. Let's go, bro. Shout out to the Houston squad. Out here showing love. I love you guys so much. I can't wait to see you guys again. Oh my God. Yo, drop a 111 if I'm gonna see you in New Mexico. Drop a 111 in the chat. Who's going? I gotta know who's going. Okay. Delvis, I'll be seeing you there, bro. Okay. Yo, if you guys are not going to New Mexico, you guys need to get to New Mexico. You guys need to get there. I'm telling you guys. Get there. It's going to be phenomenal. We don't know when the next event's going to happen, right? We don't know when. We don't know how. It's going to come. Who cares? But guess what? We do know there's one going on next week. So I got a plane ticket for like what? Round trip, like 160. That's it. Okay. Do what you got to do. Wear your gloves, wear your mask. You know what I mean? Wear a whole coat if you want to, but you know, your mind is what you believe. So don't be scared about anything. Go out. There's people out and you know what I mean? Like protesting all together, you know, and I haven't heard really anything from my friends or even from myself, like from getting anything, right? So I don't know what's going on. Okay. But you need to get to Albuquerque. You need to show up. Okay, we're gonna party and profit, and it's gonna be lit. It's gonna be awesome. It's gonna be. I can't wait to see you guys. You know what I mean. I literally thought I wasn't gonna go. Then I saw myself going, and then everything started happening just like that. So with a lot of things, start knowing where you're going and start seeing yourself where you want to see yourself, and just believe no matter what, no matter how, and you're going to get there. Okay, guys. A little background about me. Sorry, guys, if I didn't introduce you. Also, in the meantime, if there's any other traders that want to pull up some charts, again, I'm not really looking for anything tonight. I like to just look for things that are happening. Sheesh. EG would have been nice if we took that by there. But silly me looking for snipers. You know, yeah, I'm from Chicago. Recently graduated college. Oh, GA. Here's actually a trade I was looking at too. We're getting some nice reactions. Man, look at that. 22. Sheesh. 2 pips. We missed it by 2 pips. My phone's not even on. See, I'm not worried about my trades, guys. If you guys are worried about your trades and you're like constantly looking at your account, see, my phone's not even on. You know what I mean? I already have my expectations drawn out. If I missed it, I missed it. I'm not too thirsty to go catch an entry. Okay, guys? Because guess what? There's an abundance of multiple entries that you can catch. Yo, Jordan, my bad. I don't know if it's like, you know, you guys are on the call. Screen share. There you go, bro. Oh, Jonah, hop on. Yeah, guys. That's all for me, really. You know what I mean? I had some of my stuff drawn out. But go ahead and study GA. If you guys, you know, learned some nuggets today, go ahead and drop a 333 if you learned a little bit more, a little like 1%. If you got 1% better, go ahead and drop a 1% in the chat right now. Go ahead, a 1% right there. Because guess what? We're compounding our growth, okay? And if you're not growing,